Satish, last month when we chatted with you, you had a fairly bearish call in the market. Has the recent run-up in the ride to 6,500 changed any of your views?
I don't think we should be very optimistic now as well, because currently what we are seeing is the Chinese slowdown is biting global markets. We've seen the Dow fall 1.4% pretty sharply. Commodity prices are falling. So I think we still have to be careful and not get carried away. Yes, there's been a good rally, and at 6,500 we are close to all-time peaks. We need to exercise caution. There's a fair bit of pre-election euphoria also getting built in, and let's be a little careful now.
Bulls, however, have a different point of view. So bulls are of the view that China's slowdown is not new news, Ukraine is history, and tapering is not having an impact on flows.
I think in terms of the China slowdown, the quantum of the slowdown is not yet known, because yes, it's been actually falling for quite some time, but the commodity prices have not yet fallen so sharply ever before, and that is an indication that probably we are getting into a severe slowdown. And the other thing is that in terms of exports, our export growth is not very robust. It's turned slightly negative last month. And therefore, what we need to understand is that the global economy is not reviving nearly as fast as what stock markets think they are. And therefore, one has to be more cautious than before. And in terms of bullishness, the sentiment is extremely bullish. We have 50 to 60% of the stocks above their 50 and 200-day moving average, which is an indicator that markets are extremely buoyant.
One minor concern from US FDA, and Sun Pharma has lost nearly 8% of its market cap in a matter of just 24 hours. Satish, do you think 550 rupees is a good entry point for Sun Pharma, or at 550 also Sun Pharma is a very expensive franchise to own?
It is still an expensive franchise to own. They have very good growth strategies, but I think I would be more comfortable entering it at around 500 to 520 rather than the current price. And I would hold it for the long term. I don't think it's going to be a short-term rally. There are possibilities of some sharp spikes, but nevertheless Sun Pharma is something which one has to hold for the medium to long term.
Satish, in your earlier interactions with us, you've talked about increasing allocation to the IT sector, when one sees dips. Would you deploy the weakness that we've seen all of last week to add positions to IT, or is IT in a void for now?
No, I don't think it's an avoid. I think there is still a fair bit of value left in mid-cap IT names, and one should look at mid-cap IT names such as KPIT, Cummins, and so all these kind of mid-cap IT companies do offer value, and we should continue holding on to them.
Did you say KPIT Cummins? Because KPIT Cummins came out with horrible Q3 set of numbers, and post their Q3 numbers, rupee only has appreciated. So I'm sure the Q4 numbers from KPIT will not be strong. What makes you bullish on KPIT at a time when they are struggling and they're reporting a run rate which is much lower than the industry average?
No, I think KPIT has some interesting products as well. So it's a company that is not purely in the service business. It has some products. It also is closely aligned with the manufacturing sector globally because of its SAP practice. And therefore, one should look at these kind of companies which are a play on manufacturing, utilities, also rather than just the pure services which are a function of the BFSI market.
So this is great.
KPIT would be an interesting. Yes, sorry.
No, I just wanted to discuss L&T as well, now that I've got a broader sense on KPIT and why you like it. Great call on L&T. The world was bearish on L&T. You wanted to buy into L&T, or you were buying into L&T at 900. L&T has moved from 900 to 1250. Do you think easy money has been made, or L&T is still a good stock to own and the risk-reward ratio is still favorable?
No, I think we have to take some money off the table on L&T. It's a core long-term holding in the portfolio given its valuations are reasonable compared to its historic levels as well as compared to some of the other companies. It's financially much stronger than before, and it continues to sell down stake in many of its companies and monetize its assets. Therefore, it's a longer-term play, but one can trim and book profits at these levels.
Satish, you've also liked M&M Forgings as well as JK Tyres when it comes to auto-related stories. Do you still continue to like them, and do you find long-term value in these names?
Yes, I think both these companies will continue to deliver good returns, especially M&M Forgings has got a global strategy in place and could be the most interesting company with both offshore and onshore sites and facilities. As regards JK Tyres, it's a highly leveraged deep value play, and consequently it's something which will be a little volatile, but at these valuations I think there's tremendous comfort.
So I think you want investors and our viewers as well about the impact of China's slowdown on Tata Motors, and that seems to be now playing out. How much more weakness / dent do you see coming into Tata Motors? And if someone is sitting on a profit, is it time to book out now?
Yes, I think Tata Motors is something which has almost 20 to 25%, and incremental growth comes from China significantly. There could be a little bit of a slowdown there. We have to be cognizant of that. But having said that, there is valuation comfort in Tata Motors. The restructuring in Tata Motors continues. And consequently, probably it's a stock where one has to have a trading strategy of probably entry at 350, selling at 400, 410, and kind of be quick on that. As regards China and developed markets, there's increasing premiumization, and premiumization as a trend continues, and therefore JLR will continue to play as a theme on premiumization. We have to be cognizant of the fact that the rich are getting richer and not necessarily poorer, and therefore they will continue to buy luxury goods.
Okay, let's talk about a stock which you track closely, IGL. IGL in quick time has appreciated by 25% from the recent lows. Do you think at the current juncture is IGL looking cheap?
IGL is a cheap stock. Its growth momentum has dropped from the earlier 20%. It's now somewhere in the 10 to 12% because the CNG conversion momentum is behind us. And consequently, it's more of a utility defensive stock rather than a growth stock. And the PE de-rating that we have witnessed over the past 2 years is a pointer towards that it's no longer a high growth, high earnings growth stock. The second thing is that the government regulations and the interference on the pricing, etc., is something which has spooked investors. And consequently, we have seen this happen across utilities, across petroleum companies, across gas companies. Wherever the government has a regulatory regime in place, stocks do not perform. So it's a defensive value stock, not necessarily a growth stock, high capital appreciation stock any longer.
Satish, there seems to be, US FDA clampdown coming in on just about any and every pharma company. Cipla has been an old favorite of yours, and now there are news reports that Mr. Hamid may have retired. You still have conviction on how the long-term, value chart of the company is likely to pan out?
I think they have invested significantly in the capex. They have invested. They are now investing in marketing, which is the reason why profits are subdued. We have to be patient on this company. It's not going to be a company like Torrent Pharma, which I had mentioned earlier, which is probably up there. So all these companies which make the investment, they see their profits and results come through only after 3 to 4 years. So we have to be fairly patient on these companies. And as regards US FDA, I think US FDA inspections and the clampdowns that we are seeing is also an acknowledgement of the fact that India is a very important partner in providing generics to the US. And there are articles saying that there is now going to be continuous evaluation of our products rather than batch inspection of our products, say once in 6 months or once in a year. And therefore, while there is a risk, there is also a growing importance of Indian generics.
Okay, now what is lighting up the screen once again? Good old warhorse, Aurobindo Pharma. Now Sun Pharma is struggling, Lupin has done nothing, but Aurobindo Pharma is now trading above 515 rupees, 3.5% up, 500,000 shares in the first 10 minutes of trade. So price action and volume action again has started for Aurobindo Pharma. Satish, I know this surely that you track Aurobindo Pharma in and out, you know the company in and out. Now surely margins have improved, the business environment has improved, but does the stock deserve to trade at a price point of 500 rupees plus?
In terms of valuations, it is still reasonable. It is also converting from a bulk to a more of a generic player, and increasingly the formulation business is playing a percentage, higher percentage in its revenues. Aurobindo at 500 to 550 rupees is probably reasonably valued. I think from now on you are going to get the earnings growth rate getting reflected in the share price appreciation rather than the PE expansion playing out.
When you could try like
we have to be fairly cognizant. Sorry.
Right. Just that we've got Satish on the satellite.
So you would see from here. So we will get 15 to 20% appreciation year on year, providing they maintain their momentum and there is no bad news from FDA. But from here on, the kind of supernormal returns are behind us.
Satish, you've talked about concerns when it comes to Tata Motors. What about Maruti and concerns about their Gujarat unit? Do they perturb you, and would you stay away from Maruti for now, or would you use these dips to get into the stock?
See, the underlying story in Maruti is a very secular and a strong story. They are actually increasing their market share. They have products for the Indian customer. All these are key positives which are well known. What is also known is that they have made no bones of the fact that Suzuki is their primary shareholder, and their royalties that go on into Suzuki, the fact that they have every time provided a plant and then merged it into the parent so that the financial impact is low, and simultaneously the parent can also increase stake, are well known facts. It is a different thing that investors have woken up today and are raising a hue and cry. But this has been the modus operandi of the company for several years now. But I think if you focus on the business, I think we will buy that stock.
Satish, I just want a yes or a no from you. Infosys yesterday corrected by about 8% plus. Today it has managed to bounce back by 1%. At 3,300 or closer to 3,400, will you be a buyer in Infosys?
Yeah, I think we should continue buying that company.
Satish, always a pleasure to have you on ET Now. Have a lovely weekend, and I look forward to see more of you going forward.
Thanks.